Saturday night, and we're back with Companynama, your weekend dose that gives you the entire week's corporate and startup highlights. I'm Shrestha Tiwari. Over to the corporate world first. Reliance Industries is in talks with lenders to raise up to $2 billion to fund the expansion of the group. Reliance plans to use India's dedicated external commercial borrowing route to secure the loan. The reports have also said that the loan may have a maturity period of 3 to 5 years, and a part of the proceeds will also be used to refinance a loan that matures in September, Bloomberg has reported. Bank of America, Citigroup and Standard Chartered are among the lenders involved in the loan discussions. Reliance had said in August last year that it plans to invest 75,000 crore rupees over 5 years to expand its oil to chemical business. Tata Group was in focus on Tuesday due to 3 updates. The first news is that Tata Group has set a target of breaking China's monopoly in EV batteries, and for this the group plans to manufacture batteries for auto and energy solutions at the lowest possible cost. Not only this, the group also plans to export batteries on the basis of low energy consumption and cheap labor. Tata Sons has had announced an investment of 13,000 crore rupees for this battery cell manufacturing and is also in talks with the Gujarat government to set up a plan to keep operating costs low. In another news, Tata Motors owned Jaguar Land Rover plans an annual investment of £3 billion while targeting revenue of over £30 billion by FY26, according to an investor presentation by the company. Jaguar Land Rover expects to have a revenue of over £28 billion in FY24. Meanwhile, Tata Group's highest growth businesses, including Indian Hotels, Tata Power, Trent and Tata Consumer, offered pay hikes between 16 to 60% to their CEOs and top executives. The board of Tata Sons also acknowledged the group's highest growth in its history to $97 billion in sales revenue in 2022-23. Dalmia Bharat, India's 4th largest cement producer, will spend around 19,000 crore rupees to expand its cement capacity to 120 million tons per annum by 2031 to cash in on the infrastructure and housing boom, its MD and CEO Puneet Dalmia has said. The company currently has a capacity of 41.1 MTPA across 14 plants and grinding units which are spread across 10 states. Market concentration in the country's telecom sector continues to have a new high despite government bailouts of public sector Bharat Sanchar Nigam and Mahanagar Telephone Nigam and private sector Vodafone Idea as well. The almost 3/4 market share of Jio Airtel makes it almost a duopoly in the market. The combined revenue or net sales share of the country's top 2 telecom operators, Bharti Airtel and Reliance Jio, in the sector's total reached an all-time high of nearly 72% in FY23 from 70.4% in FY22 and around 60% in FY20. The net sales of Reliance Jio and Bharti Airtel India were 1.67 lakh crore rupees in FY23, up 18.6% from the 1.4 lakh crore rupees a year earlier. Automobile major Mahindra & Mahindra and the Hinduja Group, promoter of Ashok Leyland, have joined the race to acquire a significant stake in MG Motor India, a wholly owned arm of Shanghai-headquartered SAIC Motor. Reportedly, the Sajjan Jindal-led JSW Group has already evinced interest to take up to 48% stake in the MG Motor India. The company's valuation is pegged at over 8,000 crore rupees. MG Motor India, which has about 1% share in the domestic passenger vehicle market, has sought expressions of interest from Indian firms, but no binding offers have been made so far, according to the sources. Talking about corporates, a list of giants were on the radar this week. Let's find out. The Ministry of Corporate Affairs has ordered an investigation against Hero MotoCorp Limited over alleged corporate governance issues. It has ordered an investigation to assess Hero MotoCorp's relationship with a third-party vendor in a case related to alleged diversion of funds. The investigation has been ordered in the public interest to probe the ownership structure of Hero MotoCorp and whether it controlled the third-party vendor. The probe, initiated under public interest, will investigate the true ownership of certain linked companies. Other than Hero MotoCorp, as per sources, the MCA will also investigate the affairs of Salt Experiences and Management Private Limited, which it suspects to be a linked entity of Hero MotoCorp. NCLT has raised questions about the maintainability of the second insolvency plea filed by aircraft lessor Air Castle on Tuesday and listed the matter on July 17th along with the earlier petition filed by the lessor. The NCLT bench asked the petitioner to satisfy the court if two petitions by the same operational creditor can be listed against the same corporate debtor. While the petitioner requested a notice to be issued to SpiceJet, the court refused and listed the petition on the same day as the earlier one. According to the counsel for Air Castle, the new petition pertains to be a separate case of default by SpiceJet. On Monday, that is June 12th, Wilmington had filed a petition against SpiceJet in NCLT, which is to be heard on July 16. In its petition, Wilmington had urged to start a bankruptcy process against SpiceJet. SEBI barred Zee founder Subhash Chandra and its chief executive officer Puneet Goenka from holding any position as director or key posts in any public listed company. The regulator has charged the duo of diverting funds. The father-son duo has moved the SAT against the SEBI order. Chandra and Goenka moved the SAT against the ruling, which on Thursday refused to stay the order. The matter will be heard on June 19th. The SEBI ban may delay the proposed merger of Sony and Zee TV in India. In another report citing sources, the Income Tax Department will likely move the Bombay High Court against a tribunal order disallowing capital gains tax in India on the sale of 10 sports to Sony Pictures Network India by a Mauritius-based entity linked to Zee. In more news, Sony Corporation may seek forensic audit of Zee after markets regulator SEBI charged Zee promoters with funds diversion. And talking about SAT, in a big relief to Sahara India Life Insurance, the Securities Appellate Tribunal on Tuesday stayed IRDA's order directing the transfer of policy liabilities of around 2 lakh policies along with assets of Sahara Group firm to SBI Life Insurance Company. The order comes after Sahara India Life filed an appeal in SAT against an order passed by IRDA. Sahara India had argued IRDA's order is against the principle of natural justice and the insurance company has not been given a chance to present its case. The company said that Sahara India Life is trying to protect the interest of its policyholders and the next hearing is scheduled on August 3rd. Sahara India Life's policyholders have got a big blow with this decision of SAT because their weight has increased. Earlier, IRDA had ordered to hand over the business of Sahara India Life Insurance to ICICI Prudential Life Insurance, but SAT had stayed this decision as well. Markets regulator SEBI has issued a show-cause notice to Khushro Jijina, former director of Piramal Fund Management, and his wife, Binefer Jijina. According to sources, both of them allegedly violated insider trading rules in the purchase of shares of Piramal. In May 2023, apart from these two, a show-cause notice has also been issued to their associate, Great Deal FinConsult Advisors. In this case, SEBI conducted an investigation during April 2018 to May 2019 and found that Khushro Jijina, being the MD of Piramal Capital Housing Finance, had some unpublished price-sensitive information, that is UPSI, related to the listed company PEL. On the basis of information, a Great Deal has earned an illegal profit of 15.32 crore rupees by trading in PEL shares through FinConsult. Due to this violation, SEBI has asked both of them as to why they should not be banned from working in the securities market, although both of them have denied the allegations levelled by SEBI. GoFirst is looking to fly again by the end of June. The airline is hopeful that the new resolution provider will give its approval for the revival plan that will be cleared by the creditors. The lenders may also give their approval for additional funding sought by the airline. The airline has sought voluntary insolvency on May 3rd. With the airline grounded, other rivals have taken over the market share in the Indian aviation space. Indigo has gained almost 4% of the share held by Go Air, and Tata Airlines, Air India and Vistara have gained almost 1%. On Thursday, the NCLT directed the RP to ensure that the engines leased from SMBC, Afro Engine Lease and R Engine Lease Finance are maintained properly. In news from Indigo, Rakesh Gangwal and family would offload 5 to 8% in Interglobe Aviation, according to a report by Reuters. The block deal may take place on July 15 when the lock-in period ends. As of March 2023, the Gangwal family had a 16.2% stake in Indigo. Rajesh Exports filed its audited results for FY23 with the exchanges without the audit report. This move is raising eyebrows on the Dalal Street. The gold refiner and manufacturer, which posted revenues of 3.4 lakh crore rupees in FY23, has a market value of over 17,000 crore rupees and did not put out this audit report and a comparative number of cash flow statements when it announced its FY23 and Q4 results on May 30th. Chartered accountants have said that the audit report is tracked closely by investors. According to media reports, the company said that it was an inadvertent omission and it is ready to file if exchanges asked for it. The ED, which is probing money laundering charges over the alleged 47,000 crore rupees bank fraud involving the Bhushan Steel, has claimed that several hundred crores had been diverted from BSL and its subsidiary Bhushan Energy. This was submitted by the agency while seeking custodial interrogation of former BSL Managing Director Neeraj Singhal. He was arrested on Friday and was remanded in ED's custody by a Delhi court till June 20th. Amid mounting debt and allegations of irregularities, BSL has gone into bankruptcy in 2017. Tata Steel acquired the company and the subsidiary out of bankruptcy and renamed it to Tata Steel BSL. It has now been merged with Tata Steel. Moving on from the corporate world to this week's major startup world updates, let's find out. First up, we have the Indian fintech sector that has grown rapidly in recent years with total funding touching $39 billion in 2022. However, funding declined by 40% in 2022 due to a number of factors. These include the global economic slowdown and the war in Ukraine, said an IIFL fintech report. In FY22, the sector saw 476 fintech deals and secured funding worth $6 billion. This was in the backdrop of a funding winter in the startup world. The Indian fintech market is expected to cross over $1 trillion by 2030. India has emerged as a global fintech superpower and is now ranked number 3 in terms of total fintech companies, the report had said. And a group of international lenders to Byjus has told the EdTech major to send a draft loan amendment proposal even as the standoff over a $1.2 billion term loan B intensified after a scheduled call between both the parties was cancelled on Monday. While the lenders remain open to negotiations, they have rejected the EdTech's proposal for one-on-one meetings. The lender group had earlier signed a cooperation agreement that requires them to act in concert in negotiations with Byjus. Last week, Byjus had said that the lenders' demands were high-handed while filing a lawsuit in the New York Supreme Court against American investment management firm Redwood and its entities over the TLB. European Union antitrust regulators took aim at Google's lucrative digital advertising business in an unprecedented decision, ordering the tech giant to sell off some of its ad businesses to address competition concerns. The European Commission said that its preliminary view after an investigation is that only the mandatory divestment by Google of part of its services would satisfy the concerns. The 27-nation EU has led the global movement to crack down on big tech companies, but relied on issuing blockbuster fines. But this is the first time that the bloc has ordered a tech giant to split up keys of business. In more news, the Competition Commission of India has moved the Supreme Court challenging a part of the National Company Law Appellate Tribunal's judgment. The judgment set aside 4 out of its 10 directives for Google, directing it to change its business model. The report adds that CCI has challenged a part of the NCLAT order that held that in order to prove abuse of dominance under Section 4 of the Competition Act, CCI must do an effective analysis. And that's all on this week's Corporate Roundup. We'll be back next Saturday, but to get daily corporate updates, watch Corporate Central, Money9's daily dose on corporates and market. Have a great weekend and don't forget to tune into Money9.